2022 is off to an absolutely untamed housing market, and the broader economy is staring into higher interest rates, significant inflation, lack of inventory, and this makes a lot of people feel uneasy. So if you're trying to figure out what all this means, you're not alone. So today we're going to take a deep dive into the main economic indicators that can help you make better decisions as to what to do and what's going to happen in the next 6 months and the next few years. This information is going to help you avoid the pitfalls that are costly. I'm breaking this down for you because it's up to you to figure out how you're going to navigate and develop and get your own investment strategy. Now, additionally, at the end, I'm going to share with you my own personal investing strategy plan of action. So, what scenarios are unfolding right now? There's multiple things that are happening right now, all at the same time. And much of the public is oblivious to what's really happening before their own eyes, and others are not even aware of what's going on. Yes, you're either going to get crushed with inflation or you're going to win with inflation. But one undisclosed impact in the housing market that we're seeing right now is the coiled spring of baby boomers who are leaving their jobs. Now, COVID just started to unleash some of that, but many retirees are gainfully employed their entire life. They own a house outright, they have some assets, and they're looking to buy a brand new home or a second home. And this puts more pressure on many primary homes, the buyers who are out there challenged to find a house. So at the very same time, we've been seeing rapidly increasing mortgage rates. Record inflation right now at 7.9%, they're telling us. Yet we've seen some positive numbers, better than expected jobs reports. But many are watching the real estate market and waiting for things to normalize, and unfortunately, that's not happening. So while we try to wait this out, prices keep on going further and further up. Considering all that information that we get on a daily basis, it's easy to get information overload. Unfortunately, many are having a hard time deciphering all this information. They fail to take any action in either direction. This is the reason I'm doing this video, so that you can decide your own investing strategy going forward. Now, give me a thumbs up if you're okay with that. The best way to move forward is to look at the main indicators that are driving the markets. You need to look at historical data and compare this to what's happening right now. Now, the only way to understand the direction of the market when what's going to happen in 6 months or a couple of years from now is to understand what's going on. And nobody has a crystal ball, and nobody can guarantee you what's going to happen in the future. But we're hearing about inflation and even hyperinflation into the future. And that's a big ugh. Because in uncertain times, the only thing you can do is look at the data and the fundamental numbers. Now, compare this to what's happened in the past, and it's going to make sense of what's going to happen in the future. The inflection point that we're seeing right now with inflation is many first-time homebuyers are either A, they can't afford a house, which is potentially the case, or B, they just can't compete with cash buyers. Now, inflation is hurting the buying power, and inflation is ultimately hurting the very people that the government should be helping. And this is very frustrating. Unfortunately, the public has been listening to the boy who cried wolf, or winter's coming. So if you're watching YouTube, you know who I'm talking about. The unfortunate thing for them is because they could be kicking themselves for not jumping in back when they could. Which leads me to point number 2, the impact in the housing market right now is interest rates. Why are interest rates rising? The Fed says they're going to raise rates 3 to 4 times this year. So with all that's going on right now, why are they raising interest rates? They keep telling us that inflation is in check, right? But they just released numbers that it's 7.9%. Do you think that that number is right, or do you think inflation is higher than that? Inflation is already adding fuel to the fire, literally. Gas prices, grocery prices, utilities. And as the conflict in Ukraine continues, gas and food prices are only going to increase. Now, inflation will increase every sector of the market. Everything in our lives is rising faster than our wages. We can see this happening, but what can you do about it? So I want to show you this because affordability takes 2 things into consideration. The home price and interest rates, which means affordability is going to plunge. The more and more people could be priced out of the market. Now let's take this as an example. Let's say the interest rates are at 4% for a 30-year fixed rate mortgage. Okay, you and I both know, looking back over time, this historically is a low rate. And many buyers are on the fence of whether they should buy now or wait. Now, no one likes anything going up, and that's because it increases the payment and lowers your purchasing power. I get it. But locking in at a low rate, for 15 or 30 years makes a lot of sense to me, because the third variable with affordability is the income. And incomes they're rising, but they're not rising as fast as the demand, which is why prices have not softened. Which leads me to number 3. The impact on the housing market right now is inventory, or should I say lack of it. If you've been paying attention to the housing market over the last few years, which you probably have, you already know that inventory is super low. And I'm talking crazy, ridiculous low. New listings for homes for sale is down another 10% year over year from last year. And as of right now, demand is not declining. Yes, the builders are building, but many supply chains have been broken. It takes 2 to 3 months longer to build a house now than it used to. And we have a pretty good read on the next 3 to 9 months with the new construction. This is based on national home builders who are very confident in going forward and growing the community count. For example, Toll Brothers told us that they're going to grow 10%. Other builders are growing at 5%. Yet other builders are telling us they're going to grow at 15%. So whether they can get those communities up and running in a timely fashion as they have expected to do, and considering the main stop and starts of building and supply chain and labor issues that we're seeing, these problems still are not going away. Even with all these challenges, we're going to see more supply to the market, right? But now, where and at what price point? Everywhere in the nation, it's rare to find homes that are priced under $300,000. But here in Myrtle Beach, you can still find a handful of bargains, and some with a market average, and we're seeing some at around $320,000. But according to the Mortgage Bankers Association, they keep telling us the demand is super strong, and interest rates are going up. So if interest rates are going up, we'll keep on seeing a point where buyers are just going to get priced out of the market. Now, we could see a demand drop. We could see this due to affordability, which we talked about, but it's also uncertain what will make the difference in the short term. We are so far behind with the number of homes that are available for sale compared to the amount of demand. There are really many buyers who are desperately want to get into the housing market, and this demand is absorbing the declines that would have normally been impacted in housing prices. Now just remember, inventory has been really low, and it's been staying really low. This is why upward pressure remains on housing prices, which leads me to number 4, impact in the housing market right now. Rising rents. We all know that over time, homeownership always is a better option than renting. Now, why is this? You can lock in a 30-year fixed rate mortgage, and you can have shelter. Your payment is capped on your shelter, right? So you can also build equity. And of course, there are many other things that you do that will cost you to maintain a home. But if you're a renter, every single year, your expenses can jump, and you're not in control of it. And in this inflationary environment, this sucks. Just ask the people who had rent's job. You know, the bad news is that this inflation causes rent to keep on going up. Now, last year, rents went up over 16%, and that's on a national basis. But some big cities had major rent increases higher than that. Unfortunately, renters don't have many options. You either A, pay rent at super high prices, or B, enter a super competitive housing market with high prices, higher interest rates. So, rising prices at some point, the consumer is going to push back. The problem with this is the consumer is not the only buyer in the market. Investment fund buyers, corporations, rental income buyers, second home buyers, retirement home buyers, and the primary buyer is having trouble competing. Which leads me to number 5. In the impact of the housing market is this picture is really murky right now. The main question I have is, people are asking is, are we buying at the peak? Well, there's no way to time the market. So the question is, either A, will it go down, or B, will it continue to be more expensive? My advice, if you need a home and you need more space, or you need to live all in one floor living, or you need to move to an area with lower taxes or better weather, those are life decisions you should buy today. Not because you're going to either lose money or make money, but because it betters your life. Now, there's still huge migration trends happening all across the nation. Baby boomers are making lifestyle changes at retirement age, and they have tremendous equity, and that's pushed many of them into dual property situation. Now, one primary and one secondary home. So look at the reason I'm telling you this, because this is actually happening. It's not fiction. The truth is, my real estate team here in Myrtle Beach has been helping many. And this is what they do. They do it every day and they're good at it. But realize that this migration from the north to the south, or from the west moving south, has been going on for decades. This is nothing new. It's just compounded and it's gone up. Places with lower taxes are benefiting from this growth. Now again, the picture is not clear and we're not going straight forward, but on one hand you have rising interest rates and declining affordability, and that puts downward pressure on the housing market. On the other hand, we have historically low inventory, price increases, and rapidly rising rents. Even vacation home rentals income is way up. So this could put even further upward pressure on the housing market. But the good news for the consumer is, who can actually buy a home that is, the United States, if it remains in this inflationary environment, can really be the winner. But this data about the economy and the market, the housing market, it's really up to you to formulate your own investing strategies. For years, the affluent have used real estate as a hedge against inflation. Now, if you already own your home and you've seen real estate prices rising at double-digit rates, you're a winner. Now, one trend is shifting is in the investor sentiment. It's above and beyond second homes, okay, and short-term rentals like Airbnb. It's up to you to figure out what to do and how you're going to get through this. Now, here's my Jerry's personal investment strategy. Mortgage rates are still super low. They're at historic low levels. Locking in on a 30-year mortgage on the right property makes sense. Crypto, NTFs, that's pure speculation and way too volatile. Stock market, I like mutual funds, low expense ratios for IRAs, long-term retirement portfolios, but the stock market currently is volatile. Bonds, they're just not paying any good returns. Cash in the bank, look, traditionally, it makes a good idea to hold some cash. But if the market goes down, you have to have some money to invest with. But with raging inflation like we have now, you're losing money every single day. This is devaluing the dollar. If we're at 8% inflation, you are losing 8% every year if you're holding cash. Now I want to show you what inflation looks like in real life. Here's a dollar, crisp, clean. Why is it crisp and clean? Because they're printing a lot of this. Now if you look at this, this is a dollar and this is a dollar. 75, 85, there we go. They're both a dollar. You can count those and both look at the same. Okay, but here's the problem. With inflation, the product that you buy with this year, and if you buy the same exact product next year, and it's at 10% inflation, guess what? It's going to cost you $1.10, okay? So your dollar is worth less. Here's another issue with inflation. If you're buying and you have your money in the bank or it's sitting in your wallet, your dollar this year is worth this much, but next year it's worth that much. It's going down in value. Make sense? Now, I've been investing in real estate for 36 years, and when I was in my 20s, I was reading books, other ways to make money, including multiple streams of income, besides just trading my labor for dollars. So yes, I worked multiple jobs, working 4:30 in the morning till 11 o'clock at night. But just want you to know, having a long-term goal is not always easy. And I can tell you, some people are going to hate you for trying to get ahead in life or for sharing these ideas. And I get comments like the words greed or rich versus poor, or that dude's telling you to buy, or, it's just going to keep on going up, or flip houses. Just understand, even if you're a good person, it's an angry world. So at the very same time, others are very appreciative for the inspiration and the information in these videos. So that's my goal. But I just want you to understand there are many investors who are stuck looking in the short term. And I learned to look further down the road, because to me, that is a lot more clear. If you're looking 10, 15, 30 years down the road, will prices be higher than they are now? Now, there's many ups and downs between here and there, but probably we're going to continue to see what's usually happened in the United States, which is housing prices go up. So if you're looking for the long term, the future usually looks a lot more clear. I'm not a buy and flip guy. I believe that is very short-sighted, it's risky, and it's not true investing because it's pure speculation. And this is where a lot of people will get burned. The buy and flip does not offer the main component of income from your initial investment and then the compound of that year over year. I'm a long-term buy and hold guy. So when someone else is paying off your properties through the rental income and you're having the tax advantages of real estate, it's amazing later in life. And this is the income that buys cars and vacations and living expenses in through retirement. That is the advantages of real estate. So there could be a pullback on prices, or there could be a slowing pace, but more than likely, we're still going to see continued price increases. Now, whether the economy is good or whether the economy is bad, never try to time the market. It's all about the revenue and the long-term appreciation. So moving forward, I'm going to continue to buy. If something works and it looks like it's got upside potential and it has the cash flow, it probably will work. But looking back, if you're an investor or even a homeowner, this is usually the way to make yourself happiest over time. Okay, I wasn't born at the beach, but I got here as fast as I could. As a kid, my mother was a waitress and my father was a sheet metal mechanic, but every summer we went to the beach, and I knew as a kid, and I went to live here at the beach. So most people aren't born here. It's a journey, it's a lot of work, but between vacation time and actually living at the beach. So wherever your life goal is, I hope you keep with that goal, and I appreciate you guys for being here. I know it's a challenging market. I wish you success. If you're looking to move here or beyond, anywhere in the United States, I have a network of real estate team members all over the United States that I can hook you up with. Give me a thumbs up if you like this. Give me a thumbs up. Comment below if you like this content. Tell me what you're doing. I really want to know, and I'll see you guys in the next video. Take care.